There's a mindset out there. There are people out there who are saying, oh, this whole copper hype, it's all because of the electric cars, and don't buy into it. Well, I disagree. If you look at the projections from, and not political organizations, not red, blue, not any, but you look at the big engineering firms, you look at all the spectrum of supply and demand, and everybody is projecting.
You're watching Silver News Daily. Subscribe for more.
Imagine this: silver prices hitting levels we've never seen before, soaring to unimaginable heights by 2025. Sounds too good to be true, right? But what if I told you that the key to this explosive growth lies hidden in copper's recent market moves? Yes, copper, the industrial giant, is sending shockwaves through the financial world, and silver is poised to ride the wave to new all-time highs. You don't want to miss this, because what we're uncovering today could redefine how you think about investing in precious metals. Let's dive in.
If plus $2,600 gold is all we have to worry about, we got nothing to worry about. The better companies should be making gobs of money. I think that's a technical description at this, the projects, the better projects. I mean, an aggressive gold price assumption in a project these days is 2,000 or 2,050. I don't think I've seen a 2,100 yet. And we're so far above that, again, the better projects should be able to advance. The better miners should be making money. And by the way, if you have a gold company that isn't making money, you really need to ask yourself if that's a gold company you want to own. So I just want to put that out there for like this. It's funny thing about gold pucks. We're only happy when the gold dollar exchange rate is going up. When it's holding at a objectively terrific level, that's not enough. We want it to be going up. So let us dispense with the wailing and gnashing of teeth and pulling of hair. There's nothing wrong with the gold dollar exchange. Well, manipulated or whatever. When I say there's nothing wrong, I mean for the actual business of mining gold, we're at a fine place. And to be going into that, what most, whether red or blue, but most economists think is a highly inflationary agenda going forward, starting from the level we're at now, I think is very bullish for gold. As for why, it does seem clear that there was a knee-jerk response to headline news, like the stuff you're talking about. To the degree that that's true, I think I usually say silly to try not to be ad hominem, but I'm just going to say it's stupid. It's just stupid. And even if Israel and Hezbollah sign a ceasefire or go into a ceasefire deal.
To understand why silver could be on the brink of a monumental surge, we first need to take a closer look at the current dynamics in the copper market. Copper, often called Dr. Copper for its ability to diagnose the health of the global economy, has been making significant moves recently. It's no exaggeration to say that when copper speaks, markets listen. And what copper is saying now could have profound implications for silver. Let's break it down. Copper is a critical industrial metal, used in everything from electrical wiring to renewable energy technologies. Over the past year, global demand for copper has surged due to increased investments in green energy projects, infrastructure developments, and the growing electrification of industries worldwide. But here's where it gets interesting. This demand hasn't been met with adequate supply. Mines are struggling to keep up, and geopolitical issues in major copper-producing countries like Chile and Peru are further straining the supply chain. The result? Copper prices have been climbing steadily, and this upward trend is reshaping the entire industrial metals market. So, what does this mean for silver? Well, silver isn't just a precious metal. It's also an essential industrial material closely tied to copper's fortunes. Both metals share a unique synergy, often being mined together and serving overlapping industrial needs. When copper prices rise, the market often shifts its focus to silver as a more accessible alternative for certain applications, creating a knock-on effect that drives silver's demand higher. This correlation has been observed time and again, and today's copper rally is setting the stage for a silver boom. But the connection doesn't end there. Investors are paying close attention to the signals copper is sending about economic growth and inflation. When copper prices rise, it often indicates expanding industrial activity and, in turn, potential inflationary pressures. In such times, investors turn to silver, not just for its industrial uses, but also for its historical role as a hedge against inflation. This dual appeal positions silver as a unique asset, benefiting from both industrial demand and safe haven investment flows. As we delve deeper, we'll see how this foundation laid by copper's market movements is just the beginning. With inflationary concerns looming in silver's supply already constrained, the stage is being set for a perfect storm that could push silver prices to unprecedented levels. But how far can it go? Stick with us because the next steps will reveal even more about this unfolding opportunity.
Don't know, right? We don't know who's going to get confirmed. We don't know what's actually going to get done. There are many things we don't know. But of all the different pathways we see forward, where's the deflationary one? I just don't see it. If let's say that the things that you and I have been speaking about all years, that finally we get this undeniable recession, and there are certainly cracks in the labor market. They get dismissed as hurricane-induced, but we got basically no jobs growth last month. We've got just today, as you and I speak, we have new home sales just fell off a cliff. Lowest number since 2010. Right? What was happening in 2010? We're still dealing with the GFC, right, after 2008. For anybody who's not politically biased, and granted, there are some signs of growth. Hey, money supply is going up like crazy. But there are ample signs of trouble. If that gets bad to where, we have that beep moment where the brown stuff is hitting the fan, you could say, that would be deflationary. Your David Rosenbergs of the world would say, for all these reasons, all these problems, we're going to have a recession and it's going to be deflationary. But, there's the Fed put, and then there's the stimmy checks. It's not just the Fed. You've got fiscal and monetary policy. So I have long said that I expect the trouble to become undeniable. That may or may not work out for me this year. But I've always said, and then the money helicopters would fly. So to the point of your question, where is the scenario where we have deflation, that we have, serious headwinds for all the metals, including the monetary ones? And I don't see it, because if there's any sign of trouble, I think they unleash the second wave, the third wave, the fourth wave of the money helicopters. The instant response is, recession is no fault of people's own. We can't let them suffer, so we're going to send them stimmy checks. And not little, $80, George Bush stimmy checks, multi-$1,000 Biden era checks. Trump won't want to let Biden give away more money than he does. So I think bad news would be seen as good news by the markets, but bad news would also unleash this monetary largesse, which I think would be very, very inflationary. Obviously, very good for gold, and probably silver would tag along as well. But ultimately, despite the recessionary parts, it would be good for, copper and even nickel and iron, oil.
Now that we've set the stage with copper's recent market dynamics, let's dive into the fascinating interplay between these two metals. Copper and silver share a unique relationship that many investors overlook. This connection stems from their shared role in industrial production, where both are critical to advancements in technology, energy, and infrastructure. Here's the key. Most silver mined today is actually a byproduct of mining for other metals like copper, zinc, and lead. When copper production slows, due to supply bottlenecks or geopolitical issues, as we're seeing now, silver production often follows suit. This creates a squeeze on silver's supply just as demand for it surges, amplifying price movements. The recent disruptions in copper supply chains are not just fueling a rally in its own price, but are also setting the stage for a silver supply crunch. But that's only half the story. The rising price of copper has historically been a harbinger of broader industrial demand. Copper's role in wiring, batteries, and renewable energy technology means that as its price rises, it signals booming sectors that also heavily rely on silver. Take the solar energy industry, for example. Silver is indispensable in the production of photovoltaic cells used in solar panels. With global investment in solar energy projects skyrocketing, demand for silver is increasing hand in hand with copper. This interconnection is why copper's market movements matter so much for silver. As copper becomes more expensive, manufacturers may look to optimize their operations by incorporating more silver where possible. At the same time, investors, spurred by copper's performance, often turn to silver as a complementary asset, especially given its lower price point in dual industrial and monetary appeal. The relationship between these two metals creates a feedback loop. Rising copper prices push silver's demand higher, while silver's safe haven status and industrial necessity ensure it doesn't just mirror copper, but outpaces it when market conditions align. What we're seeing now is the beginning of this exact scenario, a confluence of economic, industrial, and supply dynamics, setting silver up for an explosive move. In the next step, we'll explore how inflation and broader economic forces are adding even more fuel to this already potent mix, driving silver closer to its all-time highs.
Thomas Jefferson wrote in the preamble to the Declaration of Independence, "Experience hath shewn that, when it comes to tyrants and the deep state, if you will, you just have to expect the worst." So, it's not like nobody has ever gone to Washington with a budget-cutting agenda. It's not like we haven't tried to pass a balanced budget amendment or balanced budget laws that have been passed and ignored, or debt ceiling laws that get ignored so routinely, it's embarrassing that we even have them. So I think I'm trying to be nice here. It is naive to think that this time is different. And that's not to criticize Mr. Musk or Ramaswamy. I think it's great. In fact, when Trump tapped Elon to help cut government spending, it was the first time since I've been in Puerto Rico for all these years that I felt regret that I could not vote. Like everything, all the other issues aside, just the idea that Elon would try to pull a Twitter on the United States federal government was enough to get me on an airplane and try to vote for that. So I love the idea. I'm just saying, as a person who's more than 7 years old and has seen a few political cycles, it's just hopelessly naive to think that much will get done. But you know what? Even if a little bit gets done, in Washington, they refer to budget cuts. And when they speak of budget cuts, they mean a decrease in the increase. If the bureaucracy says, we completely failed in our mission, so double our budget, and they get a 50% increase in the budget, that's a budget cut in Washington because they didn't get the 100% increase they asked for. So if Elon could just tamp down those increases to maybe even like no increase, like didn't actually cut the budget, but held it steady. If that happens while the population grows, the economy grows, that is actually a net cut. That would be amazing. And of course, there's also whether he actually cuts any spending or not. There's cutting regulations, cutting regulators. Arguably, reducing red tape will be much more important. But it's sort of like the movie Brazil. I don't know if you're old enough to remember that one. There was a Monty Python graduate made a movie called Brazil, where there's a freedom-fighting plumber of sorts who takes on the red tape of the state. And if memory serves, he's literally like engulfed by the tape and disappears into nothing. I hope that doesn't happen to Elon. History says that's what always happens to reformers. We'll see what happens. The takeaway for investors, though, is I wouldn't bet money on it. I would cheer Elon all the way. But am I going to put money on, serious money on the possibility of him slaying this hydra that nobody else has ever been able to even lop one head off of? No. Show me, don't tell me.
Now, let's explore one of the most powerful drivers of silver's value, its dual role as an industrial metal and a safe haven asset. This dual identity uniquely positions silver to thrive in the current economic climate, especially as inflation continues to loom large and the global economy faces persistent uncertainty. Historically, silver has been seen as gold's younger sibling when it comes to hedging against inflation. However, silver's appeal extends beyond its use as a store of value. While gold often dominates the spotlight in times of economic turbulence, silver's combination of affordability and utility makes it a standout choice for investors looking to safeguard their wealth while still benefiting from its industrial upside. This dual nature is particularly crucial right now. Inflationary pressures are a major concern worldwide. Central banks, particularly the Federal Reserve, have been engaged in aggressive rate cuts and monetary easing policies to stimulate growth. While these measures aim to boost economies, they also devalue fiat currencies, making tangible assets like silver more attractive. During past cycles of rate cuts, silver has shown remarkable resilience and significant gains. For instance, during the last 3 major rate-cutting cycles, silver prices experienced an average peak-to-trough gain of over 300%. The current monetary environment could very well lead to a repeat of this pattern. But it doesn't stop at inflation. Silver's industrial applications give it an edge over traditional safe havens. In times of economic recovery or technological expansion, silver's demand surges due to its widespread use in industries like electronics, medical equipment, and renewable energy. Unlike gold, which primarily functions as a financial asset, silver's tangible applications create a foundation of demand that persists regardless of market sentiment. This dynamic has created a perfect storm. Inflation is driving investors towards safe haven assets, while industrial demand for silver continues to grow. As we've already seen with copper, industrial metals are thriving on the back of global infrastructure spending, green energy projects, and advancements in technology. Silver, with its unique properties and lower price point, is positioned to capitalize on both these trends. In the next step, we'll explore how historical market trends and expert forecasts are reinforcing the idea that silver is gearing up for a massive move upward, one that could rival or even surpass its previous all-time highs.
It's not a peace treaty. Doesn't mean the war's over. And Hezbollah is just one of Iran's tentacles. This does nothing to do with the real source of the tension, which is Iran, or the actual situation on the ground in Gaza. So it's hard to believe that any serious adult would wake up and look at this headline and say, oh, the world feels safe today. I don't need any safe haven assets. I mean, it's just ridiculous. And the thing with Bissett is even more ridiculous. Sure, we've got a red sweep, so he's likely to be approved. So it's not just that he's only a nominee. It's the idea that anybody can rein Trump in. Now, and I don't mean to rain on the parade for Trump fans, but, he does what he does. That's one reason why people like him, right? He's not a creature of the swamp. He might be obnoxious or whatever, but, he speaks his mind and he does what he wants. And so the idea that, a Wall Street insider that the markets got nominated as Treasury Secretary means that everything will be fine. It's just ludicrous on the face of it. We saw very clearly in the last administration that Trump will quickly replace anybody who doesn't do exactly what he says. So it doesn't matter what the person nominated thinks. It all comes down to Trump. The buck stops with him. He's the commander-in-chief in multiple scales. So I just think that to the degree that the latest news that we've seen is knocking back the gold-dollar exchange rate, and remember, I don't like to call it the gold price because it's not pork bellies or even copper. Gold is money. So all of this stuff is noise. And if the noise is knocking back the gold-dollar exchange rate, that is absolutely a buying opportunity. And in fact, my most recent purchases have been a gold and a silver stock, and I have bought physical bullion since you and I last spoke as well. So I'm putting my money where my keyboard is, or I guess we're speaking, so where my mouth is.
To fully grasp the potential of silver's upcoming surge, we need to dive into the historical trends and expert predictions that are shaping the narrative. Silver has a track record of dramatic price movements, often outperforming gold during periods of economic and market upheaval. And right now, the data points to a bullish outlook that could see silver climbing to unprecedented levels in the next 2 years. Let's look at the numbers. During the last 3 Federal Reserve rate-cutting cycles, silver experienced average gains of over 300% as it moved from undervalued levels to reflecting its true market potential. In the current environment, With rate cuts expected to continue and inflation running hot, analysts are drawing clear parallels to these past cycles. David Morgan, a renowned silver market expert, recently projected that silver could reach $40 per ounce in the next year alone. And that's just the beginning. As 2025 approaches, silver's potential for a blow-off top, where prices reach extreme highs, becomes increasingly plausible. But why are experts so confident? Beyond inflation and monetary policy, silver is benefiting from a surge in industrial demand. The push for green energy and technological advancements is a game changer. Solar energy, one of the fastest growing sectors globally, relies heavily on silver for photovoltaic cells. With governments and corporations ramping up investments in renewable energy projects, silver's industrial applications are expected to skyrocket. Additionally, the rise of artificial intelligence and other advanced technologies is creating new demand for silver in electronics and energy-efficient systems. For example, companies like NVIDIA, which power AI technologies, rely on silver-intensive microchips. As these technologies grow, the demand for silver will only intensify, putting upward pressure on its price. Historically, silver has also been a favorite during periods of economic uncertainty. It's not just above inflation. Investors turn to silver as a hedge during geopolitical turmoil, market volatility, and fears of recession. With many experts predicting a U.S. economic slowdown in the first half of 2025, the conditions are aligning perfectly for silver to outperform. What makes silver's current setup even more compelling is its affordability compared to gold. Investors looking for exposure to precious metals often see silver as a more accessible option, and this affordability increases its demand, particularly during economic downturns. As we continue, we'll examine how emerging technologies and legislative actions, like state-level initiatives to stockpile precious metals, are creating additional momentum for silver. The pieces of this puzzle are coming together, and the next step will show just how massive silver's potential really is.
May get mad at me for saying this, and again, I'm anti-war. If Trump can end the war, I can't say that's a bad thing. Would it make me sad to see, Ukraine knuckle under and give up so much territory to Russia? Perhaps, but that doesn't obligate the U.S. taxpayer, and certainly not U.S. service persons, to go and die for somebody else's war. So I'm not a warmonger, but I just think it's not realistic to think that anybody can end this conflict in 24 hours. That was a campaign promise. That was hubris, I think. Now, I can see the reason for it. I can see Trump thinking, I'll just tell Zelensky I'm not giving him another dime, so he better go and talk to the Russians, and I can fix it in 24 hours. I mean, story-wise, as an exaggeration, let's say, I can see where that might fly. But I don't know that would happen at all. The Europeans are, they're in a very different mindset from Americans. For us as Americans, this conflict is Ukraine. It's on the other side of the world. For Europe, it's on their doorstep. And, it's difficult to see Europe pulling together and really acting in a strong, cohesive way, given the cluster beep we've seen over the last few years. But war is the sort of thing that can do that. And if the U.S. steps back, I could see Europe saying, holy cow, we really need to come together and take care of this. And for the Ukrainians to basically surrender after all they've suffered, I think many Ukrainians that's really unacceptable. And I don't know if, they're going to fight to the last man. That's a really tall order. But I could absolutely see them fighting on. If the Europeans said, we can't support you as much as the U.S., but we'll step up, we'll help you, we'll support you. I could see the Ukrainians fighting on. So what I'm taking on here is the 24-hour idea. And maybe with European help, they managed to hold on a little bit longer, negotiate a better thing. They have that incursion into Russia. Maybe they can exchange that land in Russia for some of the land the Russians took and have a more acceptable settlement. I don't know how that turns out. The takeaways, though, are, and again, I don't mean to beat up on Trump here for Trump fans, but I'm just saying, as an adult with a gray beard, it's don't believe campaign promises. Don't take them at face value. These are difficult, complicated questions, and you should expect this to take longer than advertised, if it even goes the way Trump wants it all.
Now, let's take a closer look at how monetary policy, particularly the Federal Reserve's rate cuts, has historically impacted silver prices, and why the current cycle could be the most significant yet. Over the past several decades, silver has demonstrated a consistent pattern. It thrives in low-interest rate environments. This is because lower interest rates reduce the opportunity cost of holding non-yielding assets like silver, making it far more attractive to investors. Here's what the data tells us. During the last 3 major rate-cutting cycles, silver prices surged by an average of over 300% from their pre-cut lows to their cycle highs. Why does this happen? As rates are cut, inflation expectations rise, and the value of fiat currencies diminishes. Investors flock to hard assets like silver, which not only hold their value, but often appreciate in such environments. With the Federal Reserve already signaling continued rate cuts to combat economic slowdown, we're potentially entering a period that could drive silver prices to extraordinary levels. But rate cuts are only part of the equation. The broader economic implications of these policies also play a critical role. When interest rates drop, borrowing becomes cheaper, fueling investments in sectors like infrastructure, technology, and renewable energy, industries heavily reliant on silver. For instance, the ongoing push for solar energy has driven record demand for silver in photovoltaic cells. These cells are a key component in solar panels, and with global commitments to renewable energy projects at an all-time high, the demand for silver is only going to increase. Beyond industrial demand, silver also benefits from its safe haven status during times of economic uncertainty, which often accompanies rate-cutting cycles. With a potential U.S. recession looming in the first half of 2025, many investors are already positioning themselves in silver as a hedge against volatility and economic decline. What makes the current situation unique is the convergence of these factors. Rate cuts, inflation fears, and booming industrial demand are all aligning at the same time. This creates a perfect storm for silver to outperform not just gold, but many other investment assets as well. As we move forward, we'll explore how technological advancements and state-led initiatives to increase silver reserves are adding even more fuel to this fire. This isn't just a temporary trend. This is a structural shift that could define the silver market for years to come.
I don't need to beat that to death, but I do want to address something else. Most of your and my audience, I think they tend to be skeptical of the forced electrification narrative, and some of them hate electric cars, and just because they're contrarians and don't like having an idea rammed down their throat. I get that, but that doesn't mean the EVs are going away. Just because the adoption has cooled off, it doesn't mean that nobody wants these. And it also doesn't mean that the powers that be will back off. We'll see. Every time there's been trouble here, they've doubled down, except for Gavin Newsom recently with Tesla. They doubled down with incentives and, tax breaks and all kinds of stuff. So I don't think the EVs are going away. But even if they do, let's say in your fondest dreams, Tesla goes bankrupt. Well, maybe not, because now Musk is helping with Doge, right? But not the coin, the department. But anyway, let's say the EVs all go away. That still is not bearish for copper. There's a mindset out there. There are people out there who are saying, oh, this whole copper hype, it's all because of the electric cars, and don't buy into it. Well, I disagree. If you look at the projections from, and not political organizations, not red, blue, not any, but you look at the big engineering firms, you look at all the spectrum of supply and demand, and everybody is projecting huge supply deficits. And some of them break out with and without the EVs. Our copper chart has with and without. But even, I don't remember as Wood Mackenzie, or I don't remember which firm, but I've seen some of the, the big engineering firms doing this. And you look at the copper deficits going forward, and they're huge. And then on top of that, you get a nice big slice on top if the electrification dream, if the EVs add even more. So I think that's a key takeaway. I mean, the reason why copper now, not before, is not that this structural supply deficit is new. It's that I was expecting this hard landing. And now either that's going to happen like immediately or it's not going to happen and it's into the next reflationary boom. So either way, I want to get ready. I want to get my shopping list ready to buy copper stocks going into 2020.
Let's shift our focus to one of the most exciting drivers of silver's future: technological advancements and the growing need for renewable energy. These emerging trends are rapidly transforming silver into an indispensable resource, with demand poised to soar in ways we've never seen before. Silver plays a critical role in cutting-edge technologies, particularly in electronics and renewable energy. For instance, the rise of artificial intelligence, AI, is fueling a massive increase in the production of microchips and other electronic components, many of which rely on silver for their conductivity and durability. Companies like NVIDIA, which are at the forefront of the AI revolution, are heavily dependent on silver-intensive components. As AI continues to expand into industries like healthcare, finance, and autonomous vehicles, the demand for silver in these applications is set to grow exponentially. And that's just the beginning. The renewable energy sector, particularly solar power, is perhaps the biggest game changer for silver. Silver is a key ingredient in photovoltaic cells, the heart of solar panels. With governments around the world committing to ambitious net zero carbon goals, investments in solar energy have skyrocketed. Countries like China, the United States, and members of the European Union are investing billions in solar infrastructure, creating a massive surge in demand for silver. According to industry estimates, solar energy already accounts for more than 10% of global silver consumption, and this percentage is expected to rise significantly in the coming years. But it's not just AI and solar panels driving demand. Silver's unique properties make it essential for a wide range of green technologies, from energy-efficient batteries to electric vehicles. As the world transitions to cleaner energy sources, silver's industrial importance is becoming undeniable. This technological demand is coming at a time when silver supply is already constrained. Unlike gold, which is primarily mined for its own sake, most silver is a byproduct of mining for other metals like copper, lead, and zinc. As copper production faces challenges, silver's supply chain is feeling the pressure, creating a perfect storm of rising demand and limited availability. The result? A market setup that's primed for explosive growth. In the next step, we'll explore how legislative initiatives, like state-level silver reserves, are adding even more momentum to silver's rally and pushing it toward its all-time highs. The future for silver isn't just bright, it's revolutionary.
The answer to the second one is I'm still waiting. And the reason for that is for the reasons we were just discussing. I do still think that there's economic pain. And when I say that 2025 is going to be a year of inflation and the Trump administration will be highly inflationary, that's a next year and farther ahead, so a midterm outlook. In the meanwhile, there's the pain that we were just discussing, the new statistics showing economic weakness. It'll be really critical what the next jobs number comes out, because everybody has written off what was frankly a disastrous number last month. It's just the hurricanes or the Boeing strike. Well, both of those are gone. So if that number doesn't come screaming back, then that should really be a wake-up call. And one would think that whether left brain, right brain doesn't matter. Anybody that's serious about making money should see that and respond to that. And so if I'm right, then that would be bad news at that point. And so I'm talking very near term, as in the month ahead or two. That would be bearish for copper and everything industrial, oil too. The one exception would be uranium, because it marches to the beat of a different drummer. But everything else, it would be negative in the near term. And I see that as a buying opportunity. So I'm holding off on that. And if I'm wrong, I'll miss the bottom, but I'll still have plenty of opportunity to make money all the way throughout the Trump years and probably beyond. So I feel no FOMO. The downside for me is not that I lose money here. It's just that I miss, the best buying opportunity. But to the first part of your question, why? And I think most of your audience has probably heard about the structural supply problems the copper market faces. It's getting increasingly difficult to find, let alone permit, these giant, the copper mines that matter. There are some small high-grade ones here and there, but they don't really move the market. The ones that matter are giant porphyry things that they're megapits. And those are getting very, very difficult to permit anywhere in the world, even in mining jurisdictions that have been pro-mining, because there's such a large footprint. They're just magnets for opposition. And there haven't been that many big discoveries recently. There are a few spectacular ones, Friedland in the DRC and so on, but they're few and far between. So I think most of your audience probably knows.
Now, let's examine how legislative initiatives and global financial trends are further accelerating silver's ascent. Across the globe, governments and financial institutions are recognizing the importance of silver, not just as an industrial metal, but as a crucial asset for economic stability and independence. Take Texas, for example. A recent bill proposes that the state hold billions of dollars in gold and silver reserves to safeguard its financial future. This initiative highlights a growing trend of states and nations moving toward precious metals as a hedge against inflation and potential currency devaluation. By requiring the state to purchase and store substantial quantities of silver, Texas is signaling its belief in silver's enduring value in an era of economic uncertainty. This move also aligns with a broader push to reduce reliance on the U.S. dollar as the global reserve currency, a trend fueled by geopolitical tensions and central bank policies worldwide. It's not just Texas. Other states like Tennessee and Utah have implemented similar measures to bolster their reserves with precious metals, creating a ripple effect that's increasing demand for silver at a structural level. On a global stage, central banks have been adding gold and silver to their reserves at record rates. This reflects a significant shift in monetary policy, as institutions hedge against a weakening dollar and prepare for a potential overhaul of the international financial system. These actions are deeply interconnected with silver's potential as a store of value. Unlike fiat currencies, silver offers tangible worth and stability, making it an attractive option for both governments and individual investors. With inflation eroding the purchasing power of paper money, the move toward hard assets like silver represents a strategic response to a rapidly evolving economic landscape. What's even more intriguing is how these legislative efforts amplify silver's role in the broader market. As states and central banks stockpile precious metals, they contribute to the tightening of silver's already limited supply. This scarcity, coupled with soaring demand from industrial and technological sectors, is creating the perfect storm for a silver price rally. The implications are profound. These legislative initiatives not only underscore silver's value, but also reinforce its position as a cornerstone of future financial systems. As we head into the apex, we'll bring all these threads together to show how these market dynamics, coupled with industrial and monetary forces, could propel silver to unprecedented all-time highs in 2025. The pieces of the puzzle are falling into place, and the outcome could be extraordinary.
But actually, with silver, still holding over 30 and gold holding at or near nominal all-time highs, I don't have a lot of tax losses to worry about. And for the better companies, the other side of tax loss season is to look for buying opportunities, right? If I'm bullish, but the market is down, the stock is down, maybe, mid-December, I can get a really great buying opportunity. It's a time to go playing in the market with stink bids. But this year, not so much. If you got a gold and silver stock that is at 52-week lows, when silver's over 30 and gold is over 2,600, maybe that's not a stock you want to buy more of this tax loss season. So this time is a bit different. And that's a good thing. I'm glad to have gains to be protecting rather than losses to be harvesting. So the year-end point would simply be if there's more scare, if I don't know, some apparent good news out of the U.S. knocks gold down to 2,500 or even below, I think that would be a panic moment for a lot of gold's Johnny-come-lately friends. And that could create buying opportunities. If we saw something like that, I would absolutely be, have a garage sale, sell some blood, whatever necessary to back up the truck and buy some great stocks there. On the call for 2025, I'm not sure that I'll do any shopping before the end of this year. If we see signs of immediate healing in the labor market, if the U.S. economy shows much stronger, not just the labor report, because it just seems like they're always revising those anyway. But if the weekly claims and the ADP private payrolls, as well as the BLS stat, if the preponderance of data, right, shows a really strengthening U.S. laborer consumer, then I might go ahead and jump in and start buying copper stocks during this year's tax loss season. There could be tax loss opportunities for buying in the copper space. Everything else, I'd probably wait. Oil, I'm still a little bit more nervous on. Oil is like copper. People like to say maybe copper is the new oil, right? But copper is facing a structural supply shortage, whereas oil, it's facing voluntary supply cuts because of a potential glut. So it's quite different. Copper is definitely my number one pick. And depending on how we get the next economic data points, we can do an end of the year conversation, Elijah, and see how it goes. I might start buying copper during this tax loss season. Otherwise, it'll probably be early 2025. And I expect copper to do very well over the course of next year.
All the elements we've explored, rising industrial demand, inflationary pressures, copper's market signals, technological advancements, and legislative initiatives, are converging into what can only be described as a perfect storm for silver. This isn't just speculation. It's a calculated trajectory based on historical trends, current market dynamics, and emerging global shifts. So what does this mean for silver in 2025? Let's connect the dots. Industrial demand, particularly from sectors like solar energy and AI-driven technologies, is surging at unprecedented levels. This demand, combined with copper production bottlenecks, is putting immense pressure on silver supply chains. Historically, when demand outpaces supply in precious metals markets, prices don't just rise, they skyrocket. Meanwhile, inflation and monetary policies are adding fuel to the fire. With central banks cutting rates and printing money to stimulate economies, the value of fiat currencies is eroding, pushing both individual and institutional investors toward hard assets like silver. The data from previous rate-cutting cycles shows that silver thrives in these conditions, often delivering triple-digit percentage gains. This time, the stage is set for an even bigger move. Legislative actions, such as Texas's push to stockpile silver, further solidify its position as a cornerstone of future financial systems. These initiatives create structural demand, reducing available supply and amplifying the price effects of market shifts. As more states and nations follow suit, silver's role as both a safe haven and an industrial necessity will become undeniable. So where could this lead? Experts suggest that silver could reach $40 in the next year alone. But by 2025, with all these forces in play, we could see silver pushing past its previous all-time highs, potentially hitting levels that were once considered unimaginable. This isn't just about silver's past performance or its current appeal. It's about its future potential. A confluence of industrial, monetary, and geopolitical trends is positioning silver as one of the most compelling investment opportunities of our time. But remember, while the potential is exciting, investing in precious metals always carries risks. This is not financial advice. It's a roadmap to understanding why the silver market is capturing the world's attention. So what do you think? Are we witnessing the dawn of a new era for silver? Let us know your thoughts in the comments, And don't forget to subscribe to stay ahead of the trends shaping the future of investing.